Tomorrow morning, while most of America is still waking up, the Social Security Administration will begin processing what could be one of the largest payment batches of the month. And if you're expecting money, there's critical information you need to understand right now that could directly impact how much lands in your account. I'm talking about deposits that could reach $2,400 or more for some recipients. But here's what nobody's explaining clearly. The amount you receive and the exact day it arrives depends on factors most people have never been told about. And that lack of knowledge is costing thousands of seniors money they've already earned and deserve. Let me be completely straight with you. The Social Security Administration operates on a strict payment calendar that's based on when you were born and when you first started claiming benefits. And understanding the system isn't just helpful. It's essential if you want to avoid financial surprises and make sure you're getting every single dollar you're entitled to. If you were born between the 1st and the 10th of any month, your payment arrives on the 2nd Wednesday. Born between the 11th and 20th, that's the 3rd Wednesday. And if your birthday falls between the 21st and 31st, you're looking at the 4th Wednesday of each month. But here's where it gets complicated. Supplemental payments, cost of living adjustments, back payments for processing delays, and special one-time deposits can change these amounts dramatically. Before we go any further, if you're finding this information valuable and you want to stay updated on every change that affects your Social Security benefits, do me a favor and hit that subscribe button right now. Tap the notification bell so you never miss an update, and give this video a like because it helps us reach more people who need this critical information. Now let's get into the details that could put more money in your pocket. The Social Security Administration processes over 70 million payments every single month, and each one follows a system that's been carefully designed over decades. But here's what keeps financial advisors up at night. Thousands of seniors are missing out on money they've already earned simply because they don't understand how this system actually works. When we talk about a $2,400 deposit hitting your account tomorrow, we're not just talking about your regular monthly benefit. We're talking about a combination of factors that include your primary insurance amount, any cost of living adjustments that have been applied, potential back payments if there were delays in processing, and supplemental payments that you might qualify for based on your specific circumstances. Now let's get into the real mechanics of how tomorrow's payment batch actually works. The Social Security Administration doesn't just randomly send out payments. They follow what's called a staggered payment schedule. And this schedule has been in place since 1987, when Congress decided that sending all Social Security payments on the 3rd of every month was creating massive logistical problems for banks across the country. The financial institutions simply couldn't handle the volume of tens of millions of deposits all being processed simultaneously. So they split it up based on birth dates. If you started receiving benefits before May 1997, you're part of what they call the legacy group, and your payments come on the 3rd day of every month, regardless of your birth date. This legacy group includes many retirees who started claiming benefits in the 1980s and early 1990s, and their payment schedule remains protected under the original system. But if you started receiving benefits after that cutoff date, then your payment day depends entirely on which part of the month you were born in. But tomorrow's batch is special. And I'm going to explain exactly why, because there are additional payments being included that don't follow the normal schedule. Some recipients will see combined deposits that reflect not just their monthly benefit, but also retroactive adjustments, supplemental payments, and corrections that have been processed over recent weeks. The $2,400 figure we're talking about isn't just pulled out of thin air. The average Social Security retirement benefit in 2025 is sitting at around $1,876 per month for individual retirees. But here's what makes this particular payment batch different. We're looking at a combination of regular monthly benefits plus potential supplementary payments that some seniors qualify for, but many don't even know exist. Let me break this down in a way that actually makes sense for your wallet. If you're receiving the maximum Social Security benefit because you worked for 35 years, at or above the maximum taxable earnings limit, and you delayed claiming until age 70, your monthly payment could be as high as $4,270. That's the absolute ceiling, but most people aren't getting that amount. What we're seeing with tomorrow's deposit is something more nuanced. The Social Security Administration periodically issues what are called supplemental payments, and these can come from several different sources. First, there's the annual cost of living adjustment, which for 2025 came in at 2.5%. This means that if you were getting $1,800 per month in 2024, your payment automatically increased to approximately 1.45s starting in January 2025. But here's where it gets tricky. Sometimes the Social Security Administration makes errors in calculating these adjustments. And when they catch these errors, they issue back payments to make up the difference. These back payments can add several hundred to your regular monthly deposit, and they usually come without much warning except for a notice in the mail that arrives either right before or right after the money hits your account. Many seniors throw away these notices thinking they're just routine paperwork, not realizing they contain important information about why their payment amount changed. Another source of additional funds in tomorrow's batch could be related to supplemental security income, commonly known as SSI. Now, SSI is different from regular Social Security retirement benefits, but many seniors receive both programs simultaneously. SSI is needs-based, meaning it's designed to help people who have limited income and resources. And the monthly federal payment for 2025 is around $943 for an individual. If you qualify for both Social Security Retirement and SSI, these payments are calculated separately and sometimes arrive in the same deposit, which can make your total monthly income appear much higher than your base Social Security benefit alone. The key thing to understand is that SSI payments actually follow a different schedule than regular Social Security. They typically arrive on the first of the month, but when payment dates fall on weekends or holidays, things get shifted around and multiple payments can end up hitting your account on the same day. Let me talk about something that hardly anyone discusses, but absolutely should: the taxation of Social Security benefits. Depending on your total income, you might have to pay federal income tax on up to 85% of your Social Security benefits. Now, before you panic, understand that this doesn't mean the government takes 85% of your check. It means that up to 85% of your benefit amount could be considered taxable income when you file your tax return. Here's how it works. The IRS looks at what they call your combined income, which is your adjusted gross income plus any non-T-taxable interest, plus half of your Social Security benefits. If you're filing as an individual and your combined income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. If your combined income exceeds $34,000, up to 85% of your benefits may be taxable. For married couples filing jointly, these thresholds are $32,000 and $44,000 respectively. Now let's talk about the windfall elimination provision and the government pension offset. These are two rules that can significantly reduce your Social Security benefits if you also receive a pension from work where you didn't pay Social Security taxes, which is common for certain government employees and teachers in some states. The windfall elimination provision can reduce your Social Security benefit by up to half of your pension amount. The government pension offset primarily affects spousal and survivor benefits, and it reduces those benefits by 2/3 of your government pension amount. These provisions are incredibly complex, and many people don't discover they're affected until they actually apply for benefits. Here's something else that's absolutely essential to understand about tomorrow's payment: the difference between your primary insurance amount and your actual benefit amount. Your primary insurance amount is the benefit you would receive if you claim Social Security at your full retirement age, which is 67 for anyone born in 1960 or later. But your actual benefit amount depends on when you choose to start claiming. You can claim as early as 62, but if you do, your benefit gets reduced by approximately 30% compared to waiting until your full retirement age. On the flip side, if you delay claiming past your full retirement age, you earn delayed retirement credits that increase your benefit by 8% for each year you wait up until age 70. This means someone who waits until 70 instead of claiming at 67 could see their monthly payment increase by 24%. Let me share something that financial experts know, but most regular folks don't. Social Security benefits can continue to increase even after you start receiving them, and not just because of cost of living adjustments. If you're working while receiving Social Security benefits before reaching your full retirement age, there's an earnings test that can temporarily reduce your benefits if you earn more than a certain threshold. For 2025, that threshold is $23,400. If you earn more than that, the Social Security Administration withholds $1 in benefits for every $2 you earn above the limit. But here's the good news: those withheld benefits aren't gone forever. Once you reach your full retirement age, the Social Security Administration recalculates your benefit to account for the months when benefits were withheld, effectively giving you credit for those payments in the form of a permanently higher monthly benefit going forward. Tomorrow's payment batch represents more than just money hitting bank accounts. It represents the fulfillment of a social contract that's been in place since 1935. You paid into the system throughout your working years, and now you're receiving the benefits you earned. So make sure you know your payment schedule. Check your mail for explanation letters if amounts seem different. Review your Social Security statement annually, and don't hesitate to contact the Social Security Administration if something doesn't seem right, because this is your money that you earned.